about today is the Bitcoin price and everything that's actually happened.
Well, yeah, talking about prices, that's it. Everybody does it. Everybody just obsesses over price. And, I've always been more of a technology guy, but yeah, this is one of the most interesting things that I've seen happen, because there's so many stable coins propping up this $29,000 value per coin. And two of those stable coins, I can say very confidently, lost their peg yesterday. I think I saw Tether, which is the most concerning one, go as low as 93 cents. I saw it go lose its peg as low as it ever has. Terra, though, however, that was a whole different animal. That was a full collapse of a cryptocurrency that was worth $70 billion in market cap. Evidently, I don't think anything near that was actually there. And they had a stable coin too, and that was partially to blame. So do you know what happened, Alastair?
No, I'm not really aware of that, but it was just like the slide I brought up there and this is actually Market Watch back in, I think, 2018, and this was the last demise of Bitcoin, people. And this time they said, this is it, this is the final nail in the coffin in Bitcoin. The crash that happened there couldn't have been any worse, and the article goes on about it. But what's interesting about this slide is, or what Market Watch spoke about then as well, is if you look at the prices. So you look at this time whereby it drops 49%, which is essentially, it's dropped, I think, right now from 69,000 to 30,000. So, potentially 60% it's dropped down there. So back anyway, in 2012, it dropped 50%, and it went from $7.38 to $3.80. So, if we could buy Bitcoin right now for $3.80, I think people would be quite happy with that, unless you bought it for 69,000, obviously. So, no, I think I can do more down.
Call me here.
Yeah. No problem. So then we're starting looking at the other crashes that happened there as well. So again, there was another one coming back in August 12th. So it was way up at 1641, then dropped down to $7.10. That was a 57% crash, and that was a 3-day correction. So, if you look at that then, that's potentially similar to the crash that's happened right now. And as it goes through the different charts of the time, you can see the prices are going up. So, back in November of 2013 to January 2015, this was 411 days they did this for. So it's a long time in terms of losing the value of Bitcoin, and it went from a peak of $1,100 down to $152. And this correction has just happened again and again and again through the life cycle of Bitcoin. And every single time it happens, it seems to be, this is the disaster what it is. What's interesting about that is, if you look at the chart itself, you will see that there's actually at no point was it even up to 29,000. And this is going back to 2018. So obviously it hit this peak of 69,000 last year, and now it's down just under 30,000. But if you think of everything else that's happened in the market space, it's just like, because Bitcoin now is going through wallets like Coinbase and Kraken, and these companies are regulated with the markets, and they're essentially tech companies. So the tech industry has taken a massive hit in the last week and a half. I think in 3 days, I saw an article saying they lost over $1 trillion in the main 5 big tech companies out there. So, Bitcoin, because it's associated to the markets, it's not working out with things anymore, Garret. So, if the markets get hit, Bitcoin goes down as well. So people need to know it's a volatile commodity. We understand that it's a new commodity coming in, but historically it's had multiple crashes. And that's what this Market Watch is saying back in 2018. The funny thing is, every time it does this, they always say the same thing. Is this the very end of Bitcoin? So this time, is it going to go to zero and that'll be the end of it? But what you'll have seen from this slide is it's done this multiple times, and then it continues to rebound and continues to grow. And, you know, there's a lot of different institutional money into Bitcoin. You know, we saw, like, just over a week ago, it was Goldman Sachs did their first loan in Bitcoin to Coinbase. So, you know, you've got your massive institutions now getting involved in, you know, Bitcoin and this commodity. So as much as it's been hampered by everything else that's out there, and it's sort of floating around at 29,000, it can potentially go lower yet, you know, I don't see it being the demise of Bitcoin. It's just going to be one of these things, and we'll be sitting here in 2030 with a different slide, and then somewhere in there it'll be up around about, you know, 300,000, and we'll go, oh, remember when it went down to 29,000 and it was just whatever. So it just shows you the growth of what's happened with it, and as more people start to adopt the technology in itself, you know.
Yeah.
What are your thoughts on it, Matt?
Well, it's there's a very clear vetting phase here that's happening, you know, for us to, because I think a lot of people expected 100,000 this cycle. They expected, you know, Bitcoin's going to go to 100,000, Ethereum's going to go to 10 grand. You know, there was a lot of big expectations. And obviously those didn't really materialize. I mean, it got up to 69,000 or whatever. And let me think what else. Okay, it got up there, and then it basically kind of started to pull back. It was really, at this point, I mean, you could call it a double top. I mean, unless it really heavily rebounds. But, you know, you can never really say, I mean, there's so many good things and there's so much enthusiasm around it that, you know, the train will keep kind of trucking here. I mean, things will keep going just as it has in the past. I mean, you can have these brutal crashes, but the underlying technology is still good. I mean, one of the things I was pointing out earlier is, you know, if you had Tether collapse, you know, that would result in, you know, a pretty significant bank rush. I mean, people would sell a lot of Bitcoin, and I mean, I think we could see 4 digits again, to be completely honest, but it wouldn't kill the whole dream. I mean, Bitcoin wouldn't be over unless there was an extreme technical flaw that arose in, you know, its code or design, which, you know, there's some argument that that could happen. You know, I'm probably one of the few people out there that does know about a vulnerability that is in Bitcoin. It's in Bitcoin. It was in a couple other versions of OpenSSL. It's called ladder leak. If you look up ladder leak, you know, it's very, very interesting, because it's, I mean, I'm not a big gold guy, you know, whatever. I don't really care. But with gold, you know, you don't really have one atom change and then, you know, you got lead. You know, gold has been gold for as long as we've been human. But with Bitcoin, this ladder leak vulnerability, which is in it's a SEC P256-1 or whatever, like the standard of encryption that it uses for ECDSA. If there's one bit of nonce leakage, you can guess the whole private key. So with enough power, it's theoretical, but it's ladder leak's been done on, I think OpenSSL 4.0 or something like that. You know, this is all coming from an academic paper I read on a plane. You know, it was from like 2020. I read it on a plane one time, and I was like, it always stuck with me that I'm like, well, one bit of nonce leakage, which is nonce is the, you know, basically the entropy, you know, the randomness in a private key or Bitcoin transaction or whatever for ECDSA, you know, at the very core level. And unless there was an issue with that, Bitcoin's not over. So that's the core level thing. People think, oh, the price or Tether or something else, you know. Only if there was an extreme technical flaw would it be over.
Yeah, and then you're speaking about gold there, and people call Bitcoin digital gold or fool's gold, as a lot of the sort of old school guys like to call it. But essentially, gold is fool's gold, because what is it? It's like a shiny rock that we don't actually use for anything else. You know what I mean? It's not like copper. It's not a conductor we use to provide electricity. It's nothing like that. It's just a big shiny rock that we know that's in Fort Knox. We don't even know how much is in there. We don't use it for anything else. You know what I mean? It's not like silver. We don't have second uses for gold. It's just this shiny rock that we all like. The Arabs like it the most. They're like cats with a bit of tinsel paper. They love a bit of shiny rock. So maybe the Arabs have got it all stored in terms of the shiny rock. But, that's what it is. So that's gold. So why is gold not fool's gold? Oh, well, it's worth a lot of money because we've done this. This is like, there's so many use cases in terms of what this technology is bringing. And then because the Bitcoin's running